everybody, this is John here, just talking to you about the trading and new systems we got going here. John at 30minutretrading.com. Okay, the basic chart is laid out here. You already know that from previous videos. We've got the Darvas support and resistance lines. We've got the bull bear butterfly down here. We've got the BBBR line here. We've got the litmus test. We've got the M Trader 3, the M Trader and the S Trader. The new things that you will not have seen are, first off, the multi-time frame display as it's now updated. So I'm going to drop that onto the chart. On the multi-time frame display there are various values here you can change, and it's entirely up to you if you want to do that. I will explain later exactly what all those values are, but there are briefly the threshold limits and the colors and the position and so forth. So this is the multi-time frame display, and here we are, and it's the multi-time frame display as it applies to the euro dollar. The time frames are listed along the top. The descriptor is along the left hand side here. So we got monthly, weekly, daily, 4 hourly, 1 hourly, 30 minute, 15 minute, 5 minute and 1 minute. The BBB is the bull bear butterfly line. That's the line down here in this window, the bull bear butterfly line, and at any one time it reads a certain value, and if it's above 9 it's very bullish, and if it's below 9 it's very bearish, and if it's anywhere between 9 and -9 it tends to be ranging in a butterfly trend. However, of course, with many of these things you can see how you might want to trade it out of the butterfly zone, moving in one direction or another depending on your take on which way the trade's going to go. So you may choose to trade it differently and go for an early entry rather than waiting for the trend to be more fully established. The multi-time frame meter here though tells you what the frame is on each one of these. So what we have is effectively on the monthly we are completely bear, weekly we are butterfly, daily bear, 4 hourly butterfly but bearish, 1 hour bear, 30 minute bear, 15 minute bear, 5 minute bear, 1 minute bear. Okay, fairly straightforward. When it's red it's going down, when it's green it's going up. When it's yellow, it's more or less undecided. And you can change those settings however you want, which I'll come back to in a moment. The BBBR is another strength meter value, which is also listed down here. And the BBBR values are all the way along there, and they change from time to time. With the BBBR values, typically a range of +5 and over +5 or lower than -5 tends to be establishing a trend, and between those values it tends to be more ranging from side to side, butterfly, undecided, however you want to describe it. Each of those, the BBB, is calculated on about I think last time I counted them there was something like 14 different values were amalgamated to make up the answer for that, and that's to do with price action, candle strength and so on, and also a combination of different moving averages across various kind of levels of time frames and so forth. So it's a pretty good indicator about which way the market is going at the current time based on price action and moving averages. The BBBR indicator is also an amalgam of 3 separate ways of calculating based on relative strength, and that of course is to do with the candles themselves again, and this is just another way of calculating it. So when they're both in agreement, of course it's pretty a good decision to make that that's what it means. The average true range is helpful because it gives you an idea about how far a trade might go on any one of these different time frames. So it's suggesting on the euro dollar that on the 30-minute time frame, for example, that it might move 8.6 pips and on an average move. So if you got in at the beginning of that average move and got out at the end of that average move, it could move 8.6 pips on average. The spread is listed up in here, 1.6, and that spread is the cost. Okay, so you have to make at least 1.6 pips before you get to break even. Therefore, if the average true range is smaller, you're unlikely to make the money in that time frame if it's not a big enough range. If we look at the IRR along here, you can see that it has various colors and various values. The IRR is the inherent reward to risk ratio. What that means is the cost of 1.6 pips and the distance it's likely to move on any given time frame. So clearly you can see that you need to be up in the 30-minute time frame before you start getting into the zone where in that time frame you're going to get to break even more comfortably. Therefore, while you can trade on the 15-minute, the 5-minute and the M1, and you can get in and use that as the finer points of entry, your decision making really ought to be made on the basis of the 30-minute or the 1 hour when it starts to become very much more positive. So that's just a guide really. It's entirely up to you how you choose to trade. It's what I choose to trade is based on something like the 30-minute or the 1 hour when I'm dealing with this sort of situation, though I might zoom in on a smaller time frame to get a finer entry. So there you have it. That's the multi-time frame meter, and on this chart I would recommend you take trades which are bearish, clearly. So you're looking for bear trades, you're looking for trading them off the 30-minute candle or trading them off the 1 hour candle, 4 hour or daily. All of that would be fine, and you can change that obviously up here. You can go to the H1 and see what it looks like on the H1. You can go to the 4 hour and see what it looks like on the 4 hour, and you can go to the daily and see what it looks like on a daily. Clearly at the moment we've got a very bearish daily candle. That would be suggesting a bear trade on the open next day, and we're looking down for a short from there. But you can see the support level on the Darvas line there, so you really want a break of that to be completely confident that you're going to make the trade. These bull bear butterflies are all moving down, that's all good. Litmus is down, that's down, that's down, they're all down basically, they're all good to go. So it's a high probability short trade on the euro dollar coming up. Trade it off the H4, trade it off the H1 as you wish. Because we've had a big pullback like this, you might expect a reversion back up again. Often there's a reversion to the mean, so in fact in terms of trading it you might want a reversion up to the mean and then wait for the short to come again off the 1 hour or off the 30-minute, depending on how you see things. Okay, that's all I've got to say about that at the moment. It's John Cato signing out.